Michael Burry, the investor made famous by the book The Big Short, which highlighted how he and just a handful of other investors made billions of dollars shorting subprime mortgages before the housing crisis hit, is now warning in a Substack post that the market, specifically the AI financing boom, is starting to mirror the final stages of the dot-com bubble. As investors pile into AI stocks, yet consumer sentiment sits near historic lows. Is Burry right, or do you stick with the momentum? Joining us now, Apollon Wealth Management CIO Eric Sterner. Which side are you standing on here?
I think we're still in the early innings of this AI movement, and the U.S. certainly is not going to let us lose this AI revolution. So there's a lot of comparisons between now and the dot-com. The big difference is earnings. These companies are just generating massive earnings versus the dot-com area where there's a lot of unprofitable companies in the market.
I totally agree with you.
Yeah.
They are making so much money, and the demand is still very much there. But I like to use maybe the black swan of the Iran war, for example. There's a headline hitting that says Live Golf is about to enter bankruptcy proceedings. It was funded entirely in huge amount by the Saudis. The Saudis have pulled their funding now, in part because they're so worried about oil prices and they can't sell their oil. There are real problems in the Middle East. So all it takes is one sort of scare for the markets to turn. How do you protect yourself and your investors?
Yeah, I think the markets have come roaring back from the March lows with the anticipation that this conflict will be short-lived. And now here we are weeks later with still no end in sight. So I think it's important that investors in our portfolios are really focused on companies that are generating a lot of earnings, leaning into that quality factor. Now is not a true risk-on environment. I think you got to dial back the risk a little. I am bullish, but these are big risks that we need to be concerned about between inflation reigniting and no end in sight with this war.
You got $15 billion in assets under management. You like financials, industrials, and IT. Is there anything that you do not like? About 30 seconds.
I don't think, going back to what I just said, since I don't think this is a complete risk-on environment, crypto, assets like that, non-profitable companies, I would stay clear of those until we can get a resolution in this war and then hopefully get inflation back down to the 2% level.
Yeah, always nice to have profitable companies that have good cash flow in your portfolio.
Of course, a good ingredient.
Great to see you, Eric. Thank you so very much. Here we go, closing bell, and the market's in the red here. Dow Jones Industrials look to close just around 300 points to the downside. Listen, tomorrow we are right